So protect removal from your estate. How do we protect from tax? How do we plan in advance? Well, I've covered some of these already. But the first thing is to move education costs to a company where possible. So I mentioned earlier that you can obviously pay your university age kids their personal allowance rather than give them out on net income that's already been taxed. But there is also a way that you can, with a bit of clever planning, and this is again please seek advice, but if you've got private school fees, there's a way you could set something up so that your limited company is paying the school fees. And you're getting a tax rate then on that gross premium. So, don't speak to me about that one. It's not one to Google. It's not out there as a mainstream, but something to potentially consider. So to get more money out of your estate, use your 3,000 gifting allowance. This is all covered in the tax workbook that you'll get at the end of this. You can download for 3,000 a year, get it gone, get it out of your estate, saves £1,200 worth of tax immediately every time you do that. And there's also the £250 gifting allowance. And with the 3,000 allowance, you can actually go back one tax year. So you could get 6,000 out this tax year. And if you're a married couple, obviously you could potentially get 12,000 out. Use your 7-year gift allowance. If there's money sat around that you are not going to use, it's called a PET or a CLT, depending on which way you structure it. If you've got money that you're not going to spend, you just know with your COVID spend now and whatever extras you want, there's just too much money sat around. Start thinking about making gifts now and living the 7 years, whether that's to the pension, whether that's to the LISA, the JISA, their ISA, whether it's to help them pay off their mortgage. Consider making the gift now, and then if you live for 7 years, happy days.